Welcome everyone, another episode of Financial 15. We're continuing our Becker Orr Original Series on cryptocurrency. You can check out those other videos. We'll put them in the top of the screen there, so you can check out the other cryptocurrency videos. But today we're looking at cryptocurrency as an investment. Is it worthwhile to invest? What are the pros? What are the cons? We're going to go through all of that. You want to stick around.
Yeah, as Clint just mentioned, this is our second episode in the cryptocurrency series that we're putting together. And please, if you want to find out anything about that or any other series we've done or videos, please go to our website at beckerorr.com, or you can visit our YouTube channel or like us on Facebook. That would be wonderful to deal with. So Clint, let's start out. What is cryptocurrency as an investment?
That's right. And maybe it's the portfolio manager in me, but whenever I think of any investment, whether it's cryptocurrency or anything else, I always start by looking at the risk. We got to be good risk managers. I know it's easy to get caught up in the reward of how much money we might make, but I think you actually have to start on the other end, making sure you're monitoring the risk and understand the risk you're taking. And let's look at that. This is a Bitcoin. We'll get into some of the other cryptocurrencies, but this is starting with Bitcoin. Comes from Michael Batnick, the Irrelevant Investor. That's his blog. Rolling 30-day standard deviation. So think about the turbulence that happens over the course of a month. That's essentially what they're graphing here. And you can see, Kevin, that black line, the top one there, looks like the Canadian Rockies, right? Lots of ups, lots of downs, very jagged. And that smooth gray line at the bottom, that's like driving through rural Saskatchewan, as flat as can be. What do you tell us? What's going on here?
Well, yeah, basically, what this is basically saying is this is a volatile investment to begin with. I mean, we're talking huge volatility that can be done. I'm looking at that S&P line, and I'm thinking that's a GIC chart, comparatively speaking, to what the normal market looks like. And let's remember, the S&P is not a GIC market. You get ups and downs all the time. There are 10, 15% swings. So if this is looking that flat, that can tell you what kind of risk is involved just by buying into Bitcoin alone and how those daily fluctuations can really start to happen. And we've had some of those, haven't we?
Oh, we've had, Bitcoin's the black line on the screen, lots of volatility. Remember back to March of 2020, which wasn't that long ago, but in the stock market in Canada, you saw almost a 40% decline in a couple of weeks. The US is about a 35% decline, same time frame. And that was one of the fastest declines of that magnitude. That can be one day in Bitcoin. It's happened on numerous occasions where they've had more than a 40% move in one day. And there's been multiple 80% plus drawdowns in the life of Bitcoin. So it is certainly volatile. There's not for the faint of heart. You have lots of risk here because it goes up and down and back and forth. I mean, overall, it certainly has gone up since inception. Folks have made money, but they've had to endure some heart-wrenching volatility to go through that. So if March 2020, if you're in the stocks and you thought that was a little scary, you don't want to touch Bitcoin because that could be one day in this cryptocurrency. Does that sound about fair, Kevin?
Yeah, I think that's a perfect description for it. I mean, a lot of people just see that, you look last year, it's 20,000. Next thing you know, it's 30,000, it's 40,000, it's over 60,000. Everybody thinks of this more as it's going to keep going and going and going. And all of a sudden you get the days like we've seen recently, and you're getting some collapses that are absolutely huge. So, I mean, even if we take a look and people think that this is, it's something that happened in the past, one day that happened in March, one day that happened in October. Let's take a look and see exactly what happened yesterday alone. The entire cryptocurrency market, as you've got stated there, dropped 22%. That's one day. We are not talking over the course of a month or 3 weeks. We're talking this happened yesterday alone. And that wasn't just Bitcoin, is it? That involves a whole bunch of this stuff.
That's the whole cryptocurrency market, not just Bitcoin. So Bitcoin, lots of volatility. Bitcoin was down, I can't remember the number, it was a big number yesterday, but the whole crypto market's over 10,000 cryptocurrencies, a 22% drop in a 24-hour time period. One day, the entire market drops that magnitude. And this is part of a drawdown here. So 4 days ago, the crypto market was worth about 2.2 trillion. Fast forward to today, it's now at 1.6 trillion. So you had a 27% haircut in 4 days for the entire market, not just one or two coins, the entire market. So it speaks to the level of volatility, not just in Bitcoin, but in all cryptocurrencies. So you have to keep that in mind, right? We can't get blindsided by the big numbers, things going up. You have to understand the risk involved and make sure you're comfortable with the risk. So we covered the risk, I think, pretty well there, Kevin. We got to look at the other side of the coin. Why are people buying these in? We know they're risky. We know they're volatile. Let's start with Bitcoin. What's the rationale there? Why are people buying Bitcoin?
Well, Bitcoin basically becomes some of those things where you're taking a look at it as it's a sort of a new evolving area to get into. And a lot of people compare it to gold and stuff along those lines. So they will buy it for being a stable commodity, something that stores value for you going forward. I'm buying my Bitcoin because, as we've said before, there's an infinite supply that's out there as to how much is going to be around. So if there's only an infinite supply, if I hold it, eventually it's got to go up and it's going to hold on to a stored value. Similar to what gold is. I mean, we mine gold all the time, but the earth only has an infinite supply of it. And when that's done, there's not any more that's going to be produced. So this is one of sort of the ways that you look at why people would buy Bitcoin. But is that stability and security really true? Or is that something that we have to concern ourselves with?
Yeah, I find it tough saying a store of value if something can move 40% a day and calling it a store of value. That maybe the terminology is wrong there, but the general theme I understand, right? Right now, there's 18.75 million Bitcoin that have been mined that are out there. There's only ever going to be 21 million, so the growth in supply will be minimal going forward, and there's still lots of demand. So if demand's higher than supply, economics 101 means there's going to be some value there. It might go up. And that's the whole concept. If you have fiat currency and people can print, central banks can print money kind of willy-nilly when they think it'd be appropriate, not the case with Bitcoin. So people think that supply-demand factor gives you a little more stability overall, and that's why they're holding it, right? Kind of like that digital gold, that similar mindset. Now, if gold or Bitcoin is the digital gold, we got to think of the Ethereum, the second biggest cryptocurrency out there. And some people say it's the digital silver. Now, keep in mind here, we're just using this as an analogy to help people understand why people invest in Bitcoin or Ethereum. It's not actually gold or silver. It's just the concept. The concept is gold is kind of that store of value, which people think Bitcoin could be. And silver has lots of industrial uses, unlike gold, which has very few industrial uses. Ethereum, lots of practical applications, far more than Bitcoin. There's a whole world of decentralized finance that runs off Ethereum. There's non-fungible tokens, and that's just the tip of the iceberg. We'll get into those in future videos, but that's the concept, right, Kevin? You kind of got Bitcoin as gold, Ethereum with all the practical uses, more similar to a silver.
Yeah, I would say that they're very good comparisons in that aspect. Because again, I mean, if we take a look at, and just going back to the Bitcoin point for a moment, nobody walks into Starbucks and puts down a brick of gold to buy coffee. It's the same sort of thing. I mean, Bitcoin has got too high a price. You're not going to the local store and spending it that way. Whereas Ethereum is used to make currencies. It's digital coins and things like that. So this stuff can be utilized that way. It's got much more practical applications and things that we see going forward from there. So yeah, exactly. I think those are good comparisons to look at. But again, we're just using two of the scenarios that are out there. But one of the important things, how do we start to buy this if we want to look at it as an investment?
Yeah, so we had Bitcoin, we had Ethereum there. How do people actually access it? There's really three big camps for most folks of how they go about accessing it. There's the direct way, which means you've got to get into the crypto space, get on an exchange, and then make the purchase. There are decentralized exchanges. I think most folks will use a centralized exchange, which means you're probably going to a Kraken, a Coinbase, a BlockFi, Binance, one of those. Or maybe you have a trading platform like Robinhood. They actually allow you to buy some cryptocurrencies as well. What that means, you got to fill in all the standard forms because those exchanges are centralized, which means you got to do your know your client stuff. You got to provide ID. And then when you do buy the currency, you can't just put it in your TFSA or put it in your RSP, not if you go direct. So there are pros and cons to each, but that's what often people were doing, was doing more direct. In fact, until recently, that was probably the only way people were getting access to this, was through the direct route. What are some of the other ways people can get access to the cryptocurrencies, Kevin?
Well, yeah, some of the other ways. I mean, if we take a look at the exchange traded fund market, everybody knows what the exchange traded fund or ETFs are now. And that's basically been one of the key areas for people to try and get into. One point I will make mention, if you're looking at that direct and you do not know what Coinbase or Kraken or Binance is, this is fine. This is early stage stuff that's going on in cryptocurrency alone. So we can explain those down the road, but we want to give you a sort of a general scenario what it is. But yeah, in the exchange traded market scenario, you can get actual physical sort of scenario to it. And what I mean by that is there are ETFs that buy the physical gold. These ETFs that we're taking a look at here basically buy the physical cryptocurrency, as opposed to saying some gold ETFs where you're buying the companies that mine the gold. This is basically where it is. That will come later on down the road. And again, as opposed to the direct where you can't hold it in an RSP or TFSA, these are made so that you can hold it in registered investments and get the gains that go on from there. So exchange traded funds are going to be, I think, a big part of that going forward, but it's not the only way. You can go direct, you can go ETF. What's the third sort of finance challenge that we have going forward, Clint?
Yeah, it's public equities. It's still kind of indirect because you're not getting direct access. ETFs, at least you know that all they own is the cryptocurrency. Public equity is not the case. You're just buying a company that's kind of related to the crypto space. Similar to you might buy a gold mining stock because it's kind of related to gold. Same idea here. You might buy Coinbase, which is an exchange that's in the crypto space, but it trades on a regular public stock exchange like all the other stocks. Same idea if you buy MicroStrategy, PayPal, to a certain extent Tesla, they're all somewhat connected to the crypto space. So just be buying a regular stock that's connected to the crypto space the same way you might buy a gold mining stock because it's connected to gold. Same concept there. And of course, stocks can be held in TFSAs, RSPs, all the traditional investment accounts. So we've gone through this, Kevin. We've looked at why people would buy Bitcoin, why people would buy Ethereum. We looked at ways people would buy, but what about the rest of the crypto space? Why would people want to get into that? Why would they be buying those kind of other cryptocurrencies?
I guess the biggest question is, why do we want to buy any other cryptocurrencies? I mean, we discussed the first two in some sort of a length and explain of how this is going to go on. Most people may not know what a lot of the other different ones are, but why do we want to buy them? There's a good comparison for this. What are we dealing with that we can compare this to today that's possibly happened in the past?
Yeah, the internet, that's the big one. That's one people coming back to. It's an emerging technology. Remember the internet in the 90s? That's essentially what we're dealing with now with cryptocurrency. And the term there on the screen, you see the internet of money. Andreas Antonopoulos, I have to give him full credit for the term. He actually wrote a few books under that title. If you want to learn more, I'd certainly encourage you to check out those books. But that's the idea. Remember in the 90s, internet was going to solve all the world's problems. There's lots of euphoria around it. Any company connected to the internet was just going straight to the moon. And then there's going to have a big impact on our day-to-day life. Similar is happening right now in cryptocurrency. Lots of euphoria. Everyone wants a piece of it. There's lots of cryptocurrencies out there. There's a lot of applications that people think could have a big impact down the road on finance and our day-to-day lives. So a lot of similarities there. And one point to mention, we still had the internet boom and bust. Internet that claimed that it would certainly have a big impact on our lives, that came true. That happened. But we still had to go through the huge dot-com burst, the whole bubble and burst to get there. And the idea here, and where I think this analogy really starts to make some sense, is the volatility and the concept of all these companies now that are in that space, similar to all the internet companies in the 90s. Some of them just blew up, went nowhere. Even some of the winners went through incredible volatility before they got to that stage. And we don't know which ones the winners are going to be right now in the crypto space. But let's take a look at one of the ones from the internet era, Kevin. I think could be a little bit of a learning lesson here. This is Amazon. You want to walk us through what's happening here with Amazon?
Yeah, by all means, it's going to be an easy way. I'm a child of the 90s, so I went through this entire thing as to what's the internet going to be coming, what's going to go on. And Amazon's a great example. But I mean, there's other ones too. I mean, back in the early 90s when you're sitting there, I mean, pets.com was around. Compact computers were there. Do I know where they are today? No, nowhere to be found. So you never really know if anything's going to last or not. Early ones that you're holding on to do really well. And let's take a look at Amazon. You're right. I mean, it went from basically nothing all the way up to $106 and then drops all the way back down to $6. Again, why would I buy this? This was an internet bookstore. I could see no reason. Books were going the way of the dinosaur. Everybody's going to be using computers. But Jeff Bezos was a little smarter than that. Well, we can branch off beyond books. We can get into a whole bunch of other things. And as you can see over the chart, it took 10 years basically to get back to where it is. But in today's society, Amazon is one of the largest companies there is. So again, it just goes to prove at certain times that we don't know which one of these in the early stages is going to last down the road. And as has been mentioned, I mean, this does not even account. Where's Facebook? Facebook was nowhere to be found here. It was developed later. There's a variety of other options there as well. Apple's another prime example. Their computers were all based on their system, no Microsoft. Where did Apple go? All the way down. Next thing you know, what's Apple today? Largest company in the world by market cap. So as we see, you don't know what the early ones are going to be and how long it's going to last. Anything else that we can add on that space for what we've seen moving forward with the internet?
Yeah, it's a perfect analogy. The internet in the 90s, it's kind of the crypto space right now. Early days, lots of companies, everyone competing, lots of euphoria. There's probably going to be some incredible shakeouts, lots of volatility, eventually some big winners. We don't know what those big winners are going to be. Even if you happen to get one of the big winners, as we're seeing here with Amazon, doesn't mean you don't have to go through incredible volatility on the way to that massive success. And that's exactly what happened with Amazon. So I think the moral of the story here, Kevin, if I could sum it up in a quick phrase here, it's not a get-rich-quick scheme. I know when there's lots of euphoria, people think, I put $10,000 in, 6 months from now, I'm going to buy my own sports team. That's how much money I'm going to have. It doesn't quite work out that way. If we highlighted anything, it's that there's lots of volatility, lots of potential risks. So you have to make sure you know what you're getting into. So I think a better analogy, we talked about that emerging technology, whether you want to call it emerging technology, emerging market, emerging asset class, lots of ways you can think about it. I think that's a better way to view this, that it's the next up and coming thing. There's no guarantee it'll be the next internet, but think about it in those terms. That I think that emerging market, that emerging technology is probably a better way to think about this. Does that sound right?
Yeah, I think it is. I mean, we're at the beginning of this. It's the early stages of everything that's going on. We're in its infancy, just like the internet was 20, 25 years ago, and we're starting to see that move forward going forward. As you've mentioned, we cannot emphasize enough the volatility that this has here going forward. And we'll take a quick moment to get one more point. If you look at this chart here where we are, again, we're in the early majority. This is the internet back in the 2000s. Who accepted it? The baby boomers. Anybody from the Gen Xers were dealing with it. Anybody in the silent era wasn't dealing with it. So if we want this technology to move along, it's going to be the millennials. It's going to be Gen Z, because your baby boomers really aren't looking at this the same way as anybody else. So we'll get that worldwide acceptance. It's a possibility, but again, we're in the early stages, so we have to see from there. That's basically everything that I can think of from that. Otherwise, this has been our video on cryptocurrency as an investment. We want to tackle the universe and everything else going forward. But if you have questions now, or you want to talk about this, the last video, or anything else, please visit us at our website. Chatwithclintonandkevin.com is the easy way to consult with us. Otherwise, we'll be moving on to video 3. And what are we talking about then, Clint?
We're getting to the wide world of decentralized finance. We talked about Ethereum that's kind of like the digital silver. There's so many applications. There's a whole different financial network based on the Ethereum blockchain. We're going to tackle that next time. You certainly want to tune in again for our next video. So we'll see you guys again very soon.